Today, Bitcoin and Ether fall as a potential U.S. government shutdown looms. The SEC and CFTC hold a joint roundtable focused on regulatory harmonization between the two agencies. And Paul Grewal, Chief Legal Officer at Coinbase, explains a new marketing campaign aimed at stopping the banking industry's efforts to undo provisions of the Genius Act. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Digital currencies in the red this morning after it was revealed that consumer confidence edged lower in September and as the deadline to fund the government by October 1st fast approaches. As of noon Eastern, Bitcoin managed to hang on to the $113,000 level, but was trending lower into the afternoon. Ether dipped to $4,121 and XRP fell to $2.83. And taking a quick look at shares of AI infrastructure stock CoreWeave, along with crypto miner Core Scientific, both are getting a boost today after CoreWeave announced a new $14 billion partnership with Meta. That's good news for Core Scientific as shareholders prepare to meet at the end of October to vote on a merger with the AI company. Now, as we close out a volatile month for the crypto market, Bitcoin was on track to rise 3.8% in September, while Ether was headed toward a 7.7% decline. Okay, let's talk about the top stories. The SEC and CFTC held a joint roundtable on regulatory harmonization yesterday. The two agencies have been at odds in the past, including over the treatment of digital assets. SEC Chair Paul Atkins said that for too long, the SEC and the CFTC have, quote, operated in parallel lanes, too often in conflict with each other, stressing that that era is in the past. During the roundtable, the SEC and CFTC heard from industry leaders, including Arjun Sethi, co-CEO of the crypto exchange Kraken, who offered ideas on how the two agencies can better coordinate. Chair Atkins stressed that the two agencies should work together so American innovation can thrive. He pointed to, quote, decades of regulatory fragmentation, which have left innovation stranded, and that as a result, some entrepreneurs took their ideas overseas. He also said that the complexities of today's financial markets demands a harmonized approach. Now, CFTC Acting Chair Caroline Pham also spoke at the roundtable, saying the two agencies have already been hard at work implementing the recommendations of the President's Working Group on Digital Asset Markets through the SEC's Project Crypto and the CFTC's Crypto Sprint, and stressed that those efforts should continue and should also include improved harmonization between the two agencies in an effort to remove jurisdictional ambiguities and enhance market access for investors, among other things. Next, Visa is turning to stablecoins to fund businesses using its Visa Direct platform. For some background, Visa Direct is the finance giant's payment service that allows real-time payments, remittances, and more. Now it's expanding beyond fiat currencies. In an announcement today, Visa says it's launching a pilot program for certain banks and other financial institutions to pre-fund their Visa Direct wallets with stablecoins. And for those sending money cross borders, Visa says recipients will be paid in their local currency. Right now, the pilot is available for select businesses, but Visa says the pilot will expand to more customers through limited availability by April 2026. All right, for our main story, I sat down with Paul Grewal, Chief Legal Officer at Coinbase this morning, to talk about the crypto exchange's new marketing campaign launched yesterday to stop the banking industry's efforts to undo provisions of the Genius Act that allow consumers to earn crypto rewards similar to how they would with a credit card. He explained how this new campaign works and discussed regulatory advancements for crypto on Capitol Hill. So Coinbase just launched a six-figure marketing campaign pushing back against big banks who are advocating for a rollback of crypto exchanges allowing for stablecoin rewards. You actually took to X yesterday and you said that the Genius Act needs to stay as is and that big banks are pushing for a, quote, bailout. Now, the Genius Act passed in July, became law, and ever since then, customers are not allowed to earn interest on stablecoins, but Coinbase and other crypto exchanges are allowed to offer rewards for stablecoins. So why was this important for Coinbase to take on this matter that banks have issue with?
Well, the issue of rewards is certainly important to Coinbase and others offering rewards, but it's most important for the customers who enjoy the benefits that come with rewards, regardless of what platform they use. when the Genius Act passed in July on a bipartisan basis, it was very clear that rewards were an important part of the financial consideration that belonged to consumers and investors, and really were an important mechanism for making sure that they would enjoy the benefits of their participation in these crypto networks. It's unfortunate to see the banks want to relitigate this issue, to reopen a question that was resolved squarely in the favor of our customers, which was to say that they are entitled to these rewards and that they should enjoy the benefits of them.
So how does this marketing campaign work? I understand that there's a social media component. You also launched a new website. Can you just break it down for us?
Well, the campaign is really all about reaching crypto investors and ultimately crypto voters where they live. And so we thought it was very important, first of all, to make clear what the big banks were attempting to do and just how stridently they were pursuing this objective of rolling back these rewards and essentially bailing themselves out of real competition for consumers and investors' dollars. So that involved taking to social media, to be sure, putting up websites to spread the word, but ultimately with an aim towards engaging the crypto consumer to let them know that they need to tell their elected officials, we don't want to see a return to a monopoly for the big banks on providing these types of incentives and to preserve competition for the banks in a new financial system.
Now, Coinbase, I understand, offers a 4.1% reward for holders of USDC stablecoin. And, other crypto exchanges also offer rewards, Kraken being one of them. So I'm wondering, why do you think this is such a big issue for banks that they're fighting against this stablecoin rewards being offered by crypto exchanges? Just break it down for our viewers who might not understand why this is such a big issue right now.
Well, I think anyone can understand sort of the current state of play when it comes to their deposits at banks. Even though funds rates are something like 4.75% or even higher, that's the rate that the banks themselves enjoy. If you have a basic checking account or savings account, you're lucky if you get maybe 0.25%. That's not real economic value for consumers. And in contrast, as you point out, on Coinbase and on other platforms, you can enjoy well in excess of 4% for the stable coins that you hold. I think that the basic message here is that we want to allow platforms like Coinbase, as well as others, to share the economic benefits of these networks with the people who participate in them. Unfortunately, the banks lost that battle and want to continue to fight it, even though this has long been resolved by the Genius Act.
Now, the Blockchain Association actually put out a letter yesterday urging congressional leaders to keep the Genius Act as is, reaffirming the digital asset industry's belief in the Genius Act, wanting it to stay as it stands. Banks are trying to change the language through the Clarity Act, which is currently circulating now through the Senate. So what do you think happens there? And did Coinbase have any part in that Blockchain Association letter that was released yesterday? Well,
we certainly lent our voice to this debate, and we're encouraged that the Senate is working diligently on passing its version of the Clarity Act so that we have a complete market structure for crypto that's been long overdue. Genius was an important first step, but was only the first step, and it's critically important that Congress finish the job. We think it would be a terrible mistake for that final act of this legislative effort to be stalled or impacted in some way by the banks attempting to relitigate this issue of rewards for stablecoins, when it's much more important that Congress and the Senate in particular focus on establishing who is responsible for overseeing crypto at the federal level, assigning jurisdiction to the respective agencies as is appropriate, and creating the final stability and permanent structure that we need for crypto for the United States to continue to compete.
And we're going to talk more about the Genius Act in just a bit. We're going to get into it. But I'm wondering, your CEO, Ryan Armstrong, and other crypto executives earlier this month, they were on Capitol Hill fighting this issue that banks were trying to roll back the stipulation in the Genius Act related to stablecoin rewards. So what was accomplished during that time in DC? And do you think that lawmakers really listened to him and other crypto executives on this issue?
Well, I do think that lawmakers on both sides of the aisle are paying very careful attention to this issue. And frankly, we're encouraged that they understand that relitigating old issues of rewards is not the priority at this point in time. We've addressed that issue through the Genius Act. It's much more important for Congress and the Senate, again in particular, to focus on passing clarity. Brian Armstrong, our CEO, made that very clear to the lawmakers that he met, and I think that message was very well received.
We're also going to talk about the Clarity Act a little bit more in just a bit, but first, going back to the Genius Act, that bill, as we noted, that passed the House back in July. Last time we spoke, you and I, was in July,
yes,
right before the Genius Act became law here in the U.S. The first major piece of crypto legislation to become law here in the U.S. So now that it has been 2.5 months since we got that first piece of major crypto legislation become law, what has changed for the industry?
Well, I think a lot has changed. First of all, the industry has proven that even in the most partisan, divided environment in Washington that many of us can remember, Democrats and Republicans were able to come together to pass sensible rules for stablecoins that really laid the foundation for the broader legislation that we hope will soon pass on market structure. But what remains to be done on stablecoins, of course, the agencies are going to have to write rules to fill in certain details that remain after the act passed. And I think perhaps the best indication of the success of the Genius Act to date and thus far has been the continued growth of the stablecoin market and the continued proliferation and adoption of stablecoins, not just within the crypto industry, but across traditional finance and now many other industries that see that stablecoins really can solve some fundamental problems with the financial system that have plagued us for far too long.
Now, obviously, the Clarity Act, a big priority for Coinbase. You mentioned this when we spoke back in July, and Coinbase actually launched another marketing campaign over the summer, six-figure marketing campaign, pushing lawmakers to vote yes for the Clarity Act. So why is that so important for Coinbase, and what would ultimately change for your crypto exchange if the Clarity Act or a crypto market structure bill becomes law here in the U.S.?
What the Clarity Act provides, and what we think the Senate counterpart will similarly provide, is a simple, even if not perfect, but simple way for people to understand which tokens may fall under the jurisdiction of the Securities and Exchange Commission, which tokens are better understood and treated as commodities that fall under the jurisdiction of the CFTC, the Commodity Futures Trading Commission. And overall, we will finally have spot market authority at the federal level for digital assets for the very first time. That's critically important in order to resolve long-standing questions of not only which federal agencies have oversight of this market, but the relationship between the federal government as a whole and state governments that have also attempted to regulate in this area. So there are a lot of open questions that remain regarding the proper rules for crypto. Clarity provides many, if not all, of those rules for us. And I think this is also critically important for the United States' competitive posture versus other countries all over the world that are racing ahead.
Now, Grewal also discussed other crypto legislative priorities for Coinbase and explained the latest as it relates to the crypto exchange's ongoing SEC FOIA efforts. You can check out his full interview over at cnbc.com/cryptoworld. Okay, that's all for today, but we'll be back again tomorrow, and we'll see you then.